Okay, so today we are going to discuss more about some things that you need to know about OTC market. Sometimes when you trade on green market, you might still be wondering, is the same rule apply to OTC markets? Because I can see and I know that some of you here in this group don't have much time to trade in the day. Maybe like every night by 9 p.m. or 10 p.m. OTC market resume. So maybe that is the time some of you actually have the time to trade. You don't have time to trade in the day. You don't have time to trade in the with the real market. Maybe you always have time to trade during OTC market. And some of you might also be saying that, okay, why is it that sometimes in OTC market the the profit percentage, the payout is higher than sometimes the payout on real market. So maybe you don't want to trade on real market so that you want to trade on OTC market with a high profit percentage like payout, something like that, so that whenever you want to trade, your profit will be high. So I can see that some of you might be expecting that, but you might be also be thinking, um, is it the same rule apply when you are trading IQ option? So when you are trading OTC market, that whenever you trade on OTC market with some using some a particular strategy, sometimes maybe it work on both OTC market and real market. But let me tell you the things you need to know about OTC market. OTC market doesn't follow any rules. In OTC market, sometimes if you are trading real market, you will see that any currency, sorry, let's say for example euro slash USD or euro slash JPY or GBP slash USD. You see that sometimes these three currency they move the same, they move the same. Like if Euro USD is forming a green candle, sometimes the Euro JPY also will also form a green candle. If also together with the GBP USD, they form the same candle. That is why the real market follows rule. But in OTC market, there's nothing like that. If Euro USD is forming a green candle, Euro JPY might be forming a red candle. GBP USD also might be forming a green candle or a red candle. So they don't follow any rule. But in a real market, they follow rules here. The currency pair they follow rules in real market, because if this is bullish, this one also can be bullish, this one also might be bullish. So that is why whenever you are trading, you should not think of trading the same thing the same way you trade on real market. If you are trading on OTC market, you should be careful on so many things: the gap, the level, and the zone, most especially rejection. Now let me show you one thing. This There's a particular trade setup I want to show you that also work on real market as well. If you see let's say the market is moving bullish, the market is bullish, and you saw a candle, the two green candle, the two green candle, you saw a two green candle before a red candle, before the market start moving down. Okay, so which means This is the last two green candle before market decided to reverse from this level. So the last two green candle indicate that the market is about to stop. So in a situation like this, if the market decided to reach that same level, for instance, if you draw a line at the neck of, let's say, the body of this last green, the second to the last green candle, also to this edge, or sometime using this, and the market is approaching, this area, of value, like this. Once it got rejected from that level, the market will always reverse. This happen mostly on OTC market. But on real market, I've seen the difference that the market will decide to, once the price reject from that level, something like this, if the candle close like this, the next candle might still go up to form a green candle before it finally reverse. But on noticed market, if a candle reject like this, the market will reverse immediately. So let me show you how it's work on that, how it's happen in the chart. Okay, so now let's start from Euro USD. Now, okay, now let's start from Euro USD. Okay, this is Euro USD. So as you can see here, when the price is approaching to the level, let's assume this is a resistance level. This is a resistance level. Okay, now look at this market now. What do we observe here? We see that when the price is going down, the buyer decided to enter the market. We only have three bullish candles before. After that, we see a red candle. But that is not what I'm looking for. What I'm looking for is the last two bullish candle. The last two bullish candle before this red candle. So the last two bullish candle happen to appear here before this red. Then the price still continue. So if you look at it again, you see that when I place the line here, the body of this green candle, and the second line should be the the the, the highest point. Okay. So if you check to the right side, if you check to the right side, you can see the sellers has already crossed the two lines, indicating that the sellers own this market. Before the sellers cross the two line, what do you observe? You see a momentum, bearish momentum, the sellers movement, a bearish momentum that break this level. This bearish momentum tell us some power of sellers, the pressure from sellers. So in that case, if the price touch any of these two lines, we might expect a reversal. You see the sellers still push the price down, and the buyers start entering the market. Then the first thing that we see here is a rejection from sellers. So now, as you see the price reject from this level now, what are the confluence you should add to these lines? One, the previous trend is bearish. Two, there's a rejection from sellers. Three, not only rejection, what do we have here? A reversal sign, a spinning top. You can see a spinning top here, and you can see that the market doesn't reverse. Even though we have a level here, the market did not reverse. But here we have a spinning top because the price hits the major key level. So that is three market confluence. Also from this zone, you can add it to four. Now see what happened? The next candle reverse. See that the next candle reverse. Also, we see some sellers activities here. The market still reverse, but it's not going to work for so much time. It can work for a few minutes, then it stopped. You can see here the market reverse. Okay, now where as the market now is this current state now, where is the next level here? We can see a downtrend. Then this is the last two red candle before this green or before this bullish movement. So what are we going to do? What are we going to do in this kind of situation? We move the line to the body or the closing price of this red to the wick. So all we want is the buyers to break the two line to the upside, indicating some buyers movement because this is where the buyers entered. So the buyers push the price upward, okay, indicating some buyer's power. So now the next one we need is a rejection from these two lines. If the market retrace, okay, now we got a rejection from sellers. Okay, and this type of candlestick is a reversal sign, a spinning top, having both upper and lower rejection with a small body. So a spinning top, the market reverse to the upside. And if you are not okay with this spinning top, maybe sweet have it, then you can combine these two candlesticks together, which will give you a bullish candle next. Now, let's see what happened again if the market touch the level. Okay, now we have a shaven top, a shaven bottom candle. Now the question is, will the market be able to reverse? Because the price touched the line, it touched the zone, then this type of candlestick, will the market be able to reverse? I hope you can answer that question by yourself. Will the market be able to reverse? Though there's no rejection from buyers, but will it still be able to reverse? Well, I can say that the market will still reverse because what I'm seeing here is that though there's no rejection from buyers, but the price is exactly at the zone. And this type of candlestick is a reversal sign. So I hope it should reverse. This type of candlestick is a reversal sign. I hope it should reverse. But if you are not careful on how you trade, you must pay attention to the trend. Like I said, like the previous trade that I showed, the previous entry point I showed you last, that we have a bearish momentum, but we don't have enough bullish momentum. But in this case, what are we seeing here? A strong bearish momentum, but there was no strong bullish momentum here. We only have some buyers that enter from that level. So all we need is a sellers to move to stop at that level. Okay. But if I want to go with buyers here, I'll wait for a weak candle. This doji candlestick. Okay, I think here you can execute the trade, the 5 minute expiry time. Because the reason why the buyers will enter on the next candle is because this candle is weak. This red candle is weak, a doji candlestick. Though it's still having some color, but we can still call it a doji because it has a tiny body. And also it stopped at this level, at this zone with a rejection from buyers. The first candle, no rejection, but a pressure from sellers. Pressure from sellers, pressure from sellers, pressure from sellers. But now we have a weak sellers candle. So what I'm expecting on the next candle here is a bullish candle. So let's see other example. Okay, I think the market is already here. Okay, now look on the left side here. What do we have here? Please mute your mic. Try to just okay. So what do we have here? So what do we have here? We have a two green candle before this red, and also we have a one small red and one green candle before this red. So either you place the line here, okay. So either you place the line here, okay, the body of this green and the wick high. So all we need is a sellers to break the level. So sellers has already break the level. That is some pressure from sellers. Now the next one we need is the candle to reject from this line or from the zone entirely. First we have a rejection, but it closed as red, not a green candle. This candle closed inside the level. So what would you expect next? The seller's candle. This candle closed inside the level. So what do we expect next? Okay, buyers continue to push the price higher. Okay, I think that is the end of it. You can see sometimes it work 3 or 4 times. Okay, the market is still not reversing here. Why is not reversing? I think that is the situation whereby the market has already, like, what happened here is that we have first touch, second touch, but this time the market doesn't reverse. Same goes to this one. I think the first is here, second doesn't reverse, but now it's going down. So you see the market doesn't reverse here. It's a sign that there's no sign, it's a indicate that there's no sign of buyers in this level. So if there's no sign of buyers, if the sellers cross the level and buyers retrace to that level, we can expect sellers entry. It's just the way we draw the line, just like this. When the price reach this level, if you look at the left side where I draw this line, you see that there's a particular level here. That is why the candle always form like this. Upper rejection, then after that we have one more green before a red candle. If you check to the left side, you see that there's a level here. So that there's no sign of sellers here. The price continue pushing high. So once sellers break the level to the downside and the market decided to make a retracement back to that level, you can expect sellers entry. You see what I mean? Let's check to the left side. Okay, you can see there's a particular resistance level. You can see there's a particular resistance level. So when the price reached that level, it doesn't reverse. But when sellers decided to form a green candle, a pressure, then the market reverse. Same thing here. There's a resistance level here. There's a support level here. So the market reached that level doesn't reverse, which means if if the buyers decided to push the price down, the market retrace back to that same level, we can expect a reversal. If the last go more down and the market break the level to the upside, indicating some pressure from buyers, you can expect sellers entry if the price retrace back to that same level. That is what this zone, these two lines is all about. If you look on the left side, the market doesn't reverse here because there's a support level there. The support level and the market doesn't did not reverse. As you can see, there's a support level, the market did not reverse, but the price they came down again and the buyers pushed the price higher. So which means that this is a support area. This is a false breakout. See the price decided to go down, the market pushed higher. So from that level, where the market decided to go down, the price pushed higher, and if there's any rejection, we can expect some bullish entry. That's why we see some bullish entry. But that bullish entry is not still enough because we already have some lower high structure and a strong sellers movement. So there's no sign of buyers here. So if sellers entered and buyers break through or cross above these two lines, the market make a retracement again, we can expect buyers entry. This time there's no buyers, but here we might expect some buyers entry. It's just like Quasimodo pattern. Okay, it's just like Quasimodo pattern. Now the same thing here. As you can see, the last two red before this green. So market got reject from there, the market still go down. Now we see the price against sellers traders level but did not reverse. And the price again reject for that same level. It reversed, but here we see some bullish entry. So if the buyers break the level to the upside and then the market decide to retrace, we can expect some buyers entry, just like a Quasimodo pattern. So let's find one more good setup and let's predict. Okay, here the market is going up, already reverse here, already reverse here. I see Euro JPY. There the buyers are entering the market. Okay, already reverse here, also reverse here, but still a bullish movement. Reverse, reverse, reverse. Let's see. Okay, it's still going down. Okay, let me check the 2 minutes candle, the last green before the red and the green, followed by a green candle. Reverse here. Okay, so this will be the level the market should reverse. And if we had the trend line to hit, okay, okay, I think the market is going to reverse from this trend line. Let's see GBP USD. Market is reversing. Leave the card. The trend is down. Okay, I think we can expect seller's entry here. Okay, this is real market. Okay, very small green. Okay, the market, the candle is still running. I think it's 2 minutes to make the expiry time. Okay, it should stop at 56. Let's see GBP USD. Okay, the sellers entered. I think the market should stop. I think the sellers is going down because of these two lines, these two green candle before this red. So the candle reject from that level and the market is reversing. Okay, this is wrong timing. Not what I'm expecting. It should reject from this line, not only the trend line. This one is still bullish. Let's check the left side. See what is going on to the left side. Okay, here we go. Okay, I think once the candle rejects from this lower line, we can expect a reversal. So I think the next candle should be this one doesn't reverse because of the wrong timing. I think the time is wrong. It should be no. Time is wrong. I'm expecting some seller's entry. Maybe after this candle close. The buyers are trying to break the upper line. Okay, sellers entered, but no buyer's entry. Okay, here I think the buyer should enter, the seller should enter, but I think the seller should enter here. Nothing on the left side. Okay, the market has rejected from that line, and the seller should enter. Okay, you can see first time it rejects, sellers is not what I'm expecting. I want the candle to reject from this line, and this candle reject from the trend line. The next candle also go up to reject to from that horizontal line. So I expect seller's entry here. Okay, now it rejects. I think sellers should enter on the next candle. I think someone is trying to join. And here there wasn't a sign of bias. Yeah. Okay. Okay, you can see the sellers are entering the market. So this will be my last explanation. So okay, so you can see sellers entered because from this line the market reverse. Okay, guys, see you next time. I didn't have much to say this in today's trade. So in today's section, I didn't have much to say. We'll see you guys next time. See you guys next week. So maybe I will find the next topic we discuss about next week. And tomorrow there's going to be a signal by 1 p.m. as usual, 5 minutes expiry time. So I hope you guys should be ready and have a good night. Bye bye.